Good morning. This is Valerie Leonard. I am the founder of nonprofit Utopia, and I want to say welcome to today's live stream. We're going to be talking about what you need to have in place for the year end for compliance. All too often, I have seen instances where people could not receive the money that they deserve, not because they couldn't do the work, but because they didn't have paperwork in place. And in some instances, this is paperwork they didn't even realize they needed to have. Sometimes we think when we're nonprofits, we don't have to pay taxes. So that in turn means that we don't have to file any forms, but that couldn't be further from the truth, right? So we're going to talk about the forms that you need to be completing to make sure that as you do your year-end fundraising, that you are ready, that there won't be any excuses for you're not getting your money. If you don't get your money, it won't be because you didn't have your forms in place. All right, so I am going to share my screen and then we will get started. All right, so as I said before, we're going to be talking about maintaining nonprofit compliance. And actually, nonprofit compliance starts from the day that you file your form with the Secretary of State, letting your Secretary of State know, letting them know that you are forming an organization. But we're not going to focus so much on that today. We're going to talk about the compliance that you need to have in place once you have your 501c3 status. All right, so the first question is who in the organization is actually responsible for compliance? And if you answered you are absolutely correct, right? But ultimately, the board of directors, the buck stops with the board of directors. They have a fiduciary responsibility to make sure that everything is intact with your organization. So they are ultimately responsible for ensuring that the organization is in compliance. All right, your executive directors, your financial managers, and program managers and development staff, they all play a role, right? Making sure that those forms are complete. But if the staff doesn't do their job, they're not going to get in trouble by the IRS. The IRS is going to come looking for the board. So the staff's role is to complete the forms, make sure the documentation is in place to back it up, but ultimately the board, the entire board, is responsible. So here are three things that could potentially jeopardize your tax exempt status as an organization. So the first thing is private benefit and inurement. If you recall, when you filed your Form 1023 to start your nonprofit organization, you had to include language on your articles of incorporation that indicated that no part of the net earnings of this organization will accrue to the benefit of the officers, directors, key staff, etc. Right? So if you get to the point where it looks like your board members, your key staff members are actually benefiting from this organization more so than the community, then you're going to have a problem. The IRS could come in and yank your status. Another thing that could get you in trouble with the IRS is political campaign intervention. You are allowed to lobby, right? You are allowed to actually have some education around political involvement. But when you get to the point where you are being partisan or you are supporting a specific candidate as opposed to educating around issues, if someone files a complaint against you, you can be investigated and potentially lose your tax exempt status. You can, however, have education around issues, right? As long as you're not choosing a candidate or political party, you should be okay. Lobbying, as I indicated before, lobbying is permitted. However, no substantial part of your activities can be lobbying. So if you're spending more than 10% of your time, more than 10% of your resources, in the lobbying field, then you are, in jeopardy of losing your tax exempt status. All right, so we're going to talk about the role of the IRS. First of all, the role in the of the IRS, we typically think of the IRS as in the business of enforcing the code, and that is part of their job. But they really do want to educate the public. They got a number of videos. They provide technical assistance, and they even work with universities to do workshops and help you to better understand the compliance requirements. So they're not always out there to get you. All right. One of the first things you need to be aware of beyond the Form 1023 that you use to actually become tax exempt is the Form 990. This is your annual statement that you have to file with the IRS. And in lieu of a 1040, we as private citizens, as people who are running businesses, we have to file the 1040, right? But as a nonprofit, you are giving not a tax return, but an information return. So this return is going to include your financial activity, some of the activities of your programs. Is going to indicate, who's on your board, what some of your achievements have been, and all of that good stuff. And if you use this process correctly, you can use it not only as a method for sharing information with the public and to the IRS, but you can use it for marketing purposes. You can use it for management purposes, and you can use it for fundraising purposes, right? So the Form 990 is due 5.5 months after your fiscal year end is over. So if your fiscal year end is over in December, then you have until May 15th, right? If your fiscal year is over in June, say June 30th, then your, your 501, I'm sorry, your Form 990 is due, 5.5 months after that. And everybody has to file a Form 990 regardless of how much money you have, even if you don't have any money. And the type of 990 that you provide, depends on the size of the organization as well as your preference. So here is a list of the types of forms, and these forms that you have to complete are based on the size of the organization. So if your organization gets less than or equal to $50,000 a year, then you file Form 990N, that's the postcard. However, it may be in your best interest, even if you are eligible to do a postcard, you should probably do the full return. And the reason why I say that is whenever you do a return to the IRS, it's automatically sent to agencies like a oh my goodness, like a guide star. And Guide Star then creates a profile where anybody can look up your information, and they're looking up this information to better understand how the organization is run, better understand your finances. And it could be a really good way to passively attract new funders. If you only have the postcard, then the Guide Star profile is just going to say, you filed your postcard. So they'll have a copy of the last 3 years of your returns, as well as the IRS and some other agencies where people can look and see if you've been naughty, if you've been nice, so to speak. But more than likely they're just looking to get information so that they can make an informed decision as to whether or not they want to fund you. If your organization makes $200,000 or less, and you have total assets of less than $500,000, then you can elect to do the Form 990 EZ or the full 990. And there are instructions. Notice with the postcard, there are no instructions. If you have gross receipts greater than or equal to $200,000 and total assets greater than or equal to $500,000, then you should do the 990. And if you are a private foundation that gives out funds, then you should do the 990 PF for a private foundation. And just to go back, if you are in the market for new grants, and as a nonprofit, regardless, you are always looking for new money, a good place to start your research is to look at the Form 990s of private foundations. And really, these are the 990 PFs. And you could go to GuideStar, do a search for the foundation, and then you can look at their 990s and you can get a sense for how they operate, what they fund, and they even have to give you a list of all of the organizations that they fund and the amount. So that will really give you a good sense for how to position yourself in the marketplace so that you can begin to establish relationships and receive some of that funding. So, what are some of the penalties for late filing? You never want to be in a position of filing late, but it happens just like in our personal lives. We sometimes find ourselves late with filing our 1040. So, if you are late, right, organizations who have revenues of under $1 million, they're subject to a penalty of $20 per day for each day the return is late, for every return that is filed late. So if you got 2 or 3 years worth of late filings, and some organizations are even worse, then the same penalty applies for every return. And this will be for a maximum of $10,000 or 5% of your gross receipts, whichever is less. Organizations that have over $1 million are subject to a penalty of $100 a day, up to a maximum of $50,000 for every return that's filed late. Organizations that fail to file the required information return, either Form 990, 990EZ, or 990PF, or the postcard, regardless of which form you file. If you do that for 3 consecutive years, then your tax exempt status could be automatically revoked. And they don't even necessarily have to tell you about it. All right. So, what happens if you lose your tax exempt status? The first thing is don't panic, right? You're not the only one in this boat. And, what the government takes away can be restored if you're willing to go through that work. Some people would find it easier and better for themselves just to start from scratch. And this is a conversation that you need to have with your board of directors. So again, the first thing is don't panic, really think this stuff through and be strategic. You want to communicate openly and honestly with your board first, right? And your funders. And don't be, I guess you'll be afraid because the first thing you're going to feel is, regret, and you might feel a little silly. But you'll be amazed at how supportive your funders are, right? They're in this to help you. So you want to be open and honest with them and let them know what the situation is, what your plan is to prevent it from happening. You want to contact the IRS, find out what the IRS's take is. They're typically going to tell you file all your back returns, submit a letter of abatement, right? And this letter of abatement, if it's approved, excuse me, can actually take away all of the penalty and interest that you owe, right? Just because you file it doesn't necessarily mean they'll approve it, but file it as a course of action. So work with your accountant, work with an attorney, develop board and financial operation policies and procedures that will keep this from happening again. Have that policy and procedure book signed off by your board. They would need to have a board resolution and approve it. Make sure that the IRS is aware of it. Make sure that your board is aware of it. Make sure that management is aware of it and your funders. You want to develop a compliance calendar for all filings at the state and federal level. In fact, this should go into your policies and procedures, and this will help keep you on track. Now, just putting it in a calendar is not going to be the cure all. You have to follow the calendar, right? And then you want to apply to have your tax exempt status reinstated and consider using a fiscal agent while you're going through this process so you can continuously get funding and continually operate. All right, so there is a streamlined retroactive reinstatement process, and this is for organizations that, they're smaller organizations and they can file the form 10, I'm sorry, 990 EZ or the postcard, right? So they have to file within 10 months of losing tax exempt status, and you have to submit your form 1023 and the applicable fee. So, some people might say, we may as well just start from scratch if we have to go through all this. But there may be reasons why you want to go through all this rather than start from scratch. That is a decision you and your board have to make. If the IRS approves it, then the IRS will consider the organization to have reasonable cause for its failure. So, as you do that letter of abatement and any other correspondence, make sure you give a clear reason for why you didn't file. In some cases, I've seen where people didn't file because one, they didn't know. They honestly did not know. They had just started, they had been in business, and they for 3 years they left all of this stuff to their attorneys as well as their bookkeepers. It just so happens that the attorneys and the bookkeepers they hire were not well versed in nonprofits, so they didn't know. Other cases, people might have moved around without letting the state know, that there was a change of registered agent and address. So the notices for filing this stuff were going to an old address and it never got to them. So just make sure that you're very clear on why you did not, uh, why you didn't file. If you are a smaller organization who has, the Form 990 EZ, um, if you filed a letter of abatement and give a good reason for not filing, then they will take away those penalties and interest. For any year for which the organization was eligible to file a postcard, the organization is not required to file a prior year Form 990N or EZ. So you get off a little easier if you're a smaller organization. But if you're a larger organization, and those are organizations that are required to do the full Form 990, then you have to go through a regular reinstatement process. So again, you got to contact the IRS, and you have to file within 15 months of your losing tax exempt status. So in addition to everything that's required under the streamline process, right, you have to provide a statement confirming that you have filed all of your paper returns that you didn't file in the past. You have to give a reasonable cause statement that provides an acceptable reason for not filing Form 990 or the postcard for at least one of those last 3 years. And if they approve your application, they won't impose the penalty or fees. All right, the next thing that gets our organizations in trouble is payroll taxes, right? Sometimes organizations elect to file them quarterly or elect to file them annually. And when they do that, sometimes they don't put aside the money to file. They're paying other bills and they say, oh, when the money is due at the end of the quarter, then I'll pay it. But, that's like paying Russian roulette, right? So you need to file your Form 941. The Form 941 is quarterly. The 944, if you're really feeling risky, is something that you file on an annual basis, but it includes the wages you've paid, any tips your employees have received, federal income taxes that you've withheld, both the employer and the employee share of Social Security and Medicare taxes. After you file your first Form 941, you must file a return for every quarter, even if you don't have taxes to report, unless you file the annual return. All right, so I'm sorry, a final return, not an annual return. So if you're dissolving the organization and you no longer have a payroll, or if you're going to stay in business but you're no longer going to have employees, then you do a final return. All right. Form 941 is due by the last day of the month that follows the end of the quarter. So the quarter ends March 31st, for example. You have until April 30th to do your Form 941. And I strongly recommend that if you don't do this, get a payroll service, even if you only have one employee, and let them handle it, because, even though it's not rocket science, a lot of organizations get in trouble with these payroll taxes. And the penalties are extremely steep. They're worse than the penalties for not filing Form 990. So, for example, the penalties are 5% of unpaid tax due for every whole or part of a month that the return is not filed, up to a maximum of 25%, regardless of whether or not you got an extension, right? On top of that, you have to pay 1/2 of 1% of unpaid tax due for each whole or part month the tax is paid. So, you could be a day into the month and this still applies, up to a maximum of 25%, regardless of whether or not they've given you an extension. All right. Plus a penalty of 1/4% per month if an installment agreement is in effect. You have to have filed your return on or before the due date, right? So there's penalty for not filing, for filing late, as well as penalties for paying. So the maximum for late filing is 25%. The penalties won't be charged if you have a reasonable cause for failing to file or filing late. All right. And note this: use of a reporting agent or another third party. So just because you have a service in place and they don't do their part, and I've been in that situation where they haven't always done their part, you're still on the hook. All right. So here is an example of what I just shared. I think it might be a little bit easier to understand when you look at this chart. All right, so if if you have a penalty of $3,000, right? If you are, and when I say not a penalty, if you have a liability, so if you owe payroll taxes of $3,000, if you're up to 5 days late, the percentage for um, the percentage rate for underpayment is 2%. And bear with me, I have to plug my computer back in so I don't go out. All right, so the penalty is 2%. So after 5 days or up to 5 days, that's a penalty of $60 on $3,000. If you are 15 days late, the penalty for underpayment goes up to 5%, and then you will owe $150. If you're 16 days late, anything over 16 days, then the failure to deposit, right? So this is failure to deposit 10%. It becomes $300. So this is the failure to pay. more than 10 days after your first IRS bill, then it goes up to 15%, and then your penalty is $450. So you see how that has gone up exponentially just within the first month. Now multiply this by month after month after month. And that's not all. So there are other penalties. So you've got a failure to file penalty, and that's 5% per month of unpaid tax, right? So that's a maximum of 25%. And then your failure to pay is in one half of 1% per month, and then 1% after a notice of intent to levy for a maximum of 25%. So you got that 50% on top of that $450. All right. And that's just on top of $3,000. If you owe more than $3,000, your penalty is going to be significantly worse. All right. So the penalties for late filing, it ranges from 2 to 6%, as I've also I just shared with you, and a 10% avoidance penalty when the deposits are not made on a timely basis. All right, so this information, this is just another way of showing what I just shared on the past slides. And not only do you have to file payroll taxes at the federal level, but you have to file payroll taxes at the state level. So in the state of Illinois, you do that by filing Form AG 990IL. And if you are in another state, I suggest that you contact your state Department of Revenue or whoever handles the income taxes. Contact them and find out what your forms and other filings look like. But for the state of Illinois, we do AG 990IL, and the filing fee is $15. And if you're late filing, then it goes up to $100 for every late return. All right, next in the compliance mix is the Illinois Attorney General's office. If you don't live in the state of Illinois, you should contact your Illinois, I'm sorry, you should contact your Attorney General's office and any office that will handle nonprofits, any office that will handle businesses, so that you can begin to understand what your compliance requirements are. So for the state of Illinois, we have the Attorney General's office that handles the registration and the annual reporting. So if you are starting an organization, or if you have started an organization and you had no idea, had no clue that you were supposed to file these forms in order to start fundraising legally, then your first order of business is to file Form CO1 and CO2. If you are a church, then you file CO3. CO3 is for religious institutions, and you're indicating to the state of Illinois that you are exempt from these reporting requirements. So you file Form CO1 if your organization is a startup. You file CO2 if your organization is less than a year old. And generally speaking, if your organization is more, just beyond a startup, you need to do CO1 and CO2 plus the AG 990IL. All right. And if you're a religious organization, then you just focus on doing that CO3. Again, you are not raising money legally in the state of Illinois unless you have registered with the Attorney General's office. And even if you live in another state, you are not raising funds legally until you have registered with your Attorney General's office. If you intend to raise money in more than one state, then every state that you're uh, raising funds in, then you need to register with that state's Attorney General. All right. Oh, all right. And then for the Attorney General's office, as I indicated before, when we were talking about the annual filings for the AG 990IL, that goes to the Attorney General's office as well. All right, so next is filing with the Illinois Department of Revenue. Your initial compliance. So when you start your organization, and most organizations are not aware of this. So if you have never filed, and if you live in the state of Illinois, then you need to file Reg 1. And this is a way of putting our Department of Revenue on notice that you are a new business. So you indicate whether or not you are a tax exempt organization, and you can register your business through the Illinois Business Gateway. And you complete and file Form Reg 1. And if you are a member of the nonprofit Utopia community, I will give you a checklist of all of these forms we're talking about. I will also have links to these forms as well as instructions, and we'll be going over them on Wednesday during our members only session. So I'm going to send those out ahead of time so you can check and see which ones you have, which ones you don't have, and we'll just focus on the ones that our members need. Alrighty, you also need to register and maintain exemption from sales taxes, and you do that with Form Tax 1. If you don't live in the state of Illinois, and if your state offers exemption from sales tax, then you should probably speak with your Department of Revenue and find out what the procedure is. I'm sharing the procedure as it relates to organizations that are registered in the state of Illinois. So if you want to apply for an E number with the state of Illinois, then you're going to have to complete Form Tax 1. And then in addition to Form Tax 1, for first-time applicants, you're going to have to give articles of incorporation, your bylaws, your IRS letter of determination, your tax-exempt letter, the most recent financial statement. And if you're a religious organization, you don't have to give that information. You'll need to have a brief narrative that explains what your purposes are, your functions and activities for your organization, as well as marketing collateral. And you should note that if your organization's primary focus is economic development, 9.9 times out of 10, you're not going to be eligible for exemption from sales tax. All right, so if you want to renew, you have to do this renewal every year. You're going to have to submit a current copy of your um, exempt status, and it's going to have your E99 number, copy of your articles of incorporation, and if you're not incorporated, then a copy of your constitution, copy of your bylaws, copy of your IRS letter, any brochures, and your most recent financial statement. All right. The Department of Revenue is also responsible for payroll tax withholding. So the same process that you follow with your 941s at the federal level, you're going to do a very similar process at the state level. You're going to do Form 941 IL or your IL Form 941. And your payroll taxes for the state are due at the same time as your federal taxes. So 1 month after the end of the quarter. All right. Penalties for late filing of payroll taxes. And this is in the state of Illinois. If you don't live in the state of Illinois, then you will need to contact your own state Department of Revenue. All right. So you're going to owe a late filing penalty if you don't file a processable return. Okay. So when they say processable return, that is a return that is perfect. If there's some information that's missing and they're not able to process it, then the clock keeps on ticking, right? There's a bad check penalty of $25 if your check bounces. All right, and that's going to be assessed in addition to any other fee. All right, so tier one penalties for late filing. It's going to be the lesser of $250 or 2% of the tax required to be shown due on the return and reduced by timely payments or credits. So if you already have some payment, you made an incomplete payment, then your penalty is going to be reduced somewhat. All right, so if the return is timely filed but can't be processed, you'll have 30 days to correct the return. All right, otherwise the clock is going to continue before the penalty is due. Tier two, if you don't file a return within 30 days after receiving notice of non filing, on top of that, you're going to get an additional penalty of the greater of $250 or 2% of the tax payment due. The additional payment can't be greater than $5,000, and the penalty will be assessed even if there's no tax due. So they are really, really keen on your filing. So remember, you have to pay taxes and you have to file. So those were the penalties for late filing. So on top of that, there are penalties for late payment. And this is just at the state level. And this is on top of any penalties at the federal level. And you can understand with all of these penalties, many small businesses, many nonprofits, they could be in danger of just closing their doors if they're not able to meet all of these penalties. So the penalties for late filing and payment. So for late payment is based on the number of days the tax is required to be shown due. So 1 to 30 days late is a 2% penalty. A month or more late is 10%. All right. The Illinois Secretary of State's office and the Illinois Secretary of State's office, they are the first office that you will encounter when you are starting a nonprofit organization. You're going to have to file your nonprofit articles, right? And if you're in a situation where you have filed, um, you've done the expedited process, right? And with the expedited process, you're basically given a sworn statement to the effect that you are following the tax code, right, as it relates to tax exempt organizations. So they are going to take your word that you have filed your articles of incorporation and it has the required language of the IRS, right? So if you have gone through this expedited process and you didn't have to share your articles of incorporation, now is the time to go back and make sure that you have the tax exempt language. If you don't have the tax exempt language, then you should amend you should amend your your articles of incorporation and make sure that you have the tax exempt language as it relates to the purposes of the organization and as it relates to other articles, things like the annulment, what happens upon dissolution, blah, 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 blah. You also, if in the event you have to change your registered agent. So, for example, if you have an executive director that has changed and that person is no longer the registered agent, then you have to put the new registered agent's name in there that you need to file. If you change your registered offices, then you will need to file. All right. So these are the forms that you need to complete. 105.10-105.20, to change the registered agent or registered office. And then if someone resigns, then you have to do yet another form. All right. So again, as I indicated, just make sure that the language that you have is consistent with the language in the IRS. If you filed the long form with the IRS, then they have already gone through this and they've either said yay or nay. But for those people who have done the short form where they didn't have to show their articles. And if you're in a position where you're doing the long form and you got a letter from the IRS saying that there's a problem with your articles, then you're going to need to amend your articles of incorporation, and then you're also going to have to file the amendment with the state of Illinois, and then you're going to have to also complete Form NFP 110.330R, do a form, to restate your articles. So basically, what you're doing is you're showing what the original articles were. You're showing the changed language by itself, and then this last form is going to show what your articles look like that include the changed language, and all of that is going to be on file with the state of Illinois. If you are not from the state of Illinois, then you will probably need to follow a very similar process, but you need to contact your state to find out, what their specific forms and processes are. All right. In the state of Illinois, you have to do a nonprofit annual report. Some states require this and some don't, but in the state of Illinois, you're going to have to file an annual report. And that annual report is basically indicating who the officers of the organization are, your registered agent, and the registered agent's address. And you have to do this the first day of the anniversary of your incorporation. And if you don't file this report, you can be involuntarily dissolved. Isn't that amazing? Just for not filing this report, they could just say you no longer exist. So that's quite an incentive to complete the report. All righty. The next agency in the state of Illinois that you have to be concerned with is the Illinois Department of Employment Security. And these are the people who process, the benefits, for like workman's comp, unemployment, etc. So they're in compliance with FUTA, right? So the Federal Unemployment Tax Act with state unemployment systems provides for payments of unemployment compensation to workers who have lost their jobs. Most employers pay both a federal and state unemployment tax, and a list of state unemployment tax agencies, including addresses and phone numbers, is available in publication 926, Household Employer Tax Guide. Um, all right. Only the employer pays the FUTA tax. It's not deducted from the employee's wages. And for more information, look for instructions for Form 940. That's a PDF. And, that's really, really important. And the good news for nonprofits is if you're a tax exempt organization, if you're a religious organization, scientific, charitable, education organization, organized under tax exempt law, you're not subject to the FUTA tax and you don't have to file Form 940. All right. However, in the state of Illinois, you do have quarterly wage reporting and contributions that are assigned, and the annual contribution rate is there's an application that's mailed November prior to the effective year of the new rate. And if you disagree with your assigned rate, you have to contest it within 15 days. So if you're a new business, new nonprofit, you're usually assigned a new employer rate. And after 3 years, an existing business is assigned a variable rate based on total taxable wages paid and the benefits paid to employees of the business. And if you see any errors, you have 6 weeks or 45 days to contest it. And the wage reports, those are due quarterly. right? And you use form UI3/40 to complete that, and you can file online at Illinois TaxNet. And unemployment taxes and reporting. All right, you have to file the UI1 report. So when you're new, or if you've been in existence and you didn't know you had to file this form, you have to file form UI1 to put the state on notice that you're in existence. If you don't have employees, if you're for profit, then immediately this comes into play. But if you are a nonprofit organization, you don't have to worry about paying anything until the year that you have four or more employees. All right. So this is what the form looks like, the quarterly form, UI 340. So this is your quarterly contribution and wage report. All right. So late reports and remittances personally delivered will be subject to penalty and or interest. And right now, I believe you pay online. An employer who paid no wages during a quarter but has not permanently stopped being an employer must file a signed report showing that we didn't pay any wages this quarter. If you are a nonprofit or local government entity and you elected to make payments in lieu of contribution, you have to do this report quarterly, even though you don't have to make those contributions. All right, so new hire reporting has to take place within 20 days of adding an employee. You can fax the information, and here's the fax number, and you include the name, address, social security number, and hiring date. And then you have the name, address, and federal employee identification number for yourself. And again, as with any form that you don't file on time with the government, there's penalties for late filing. So these can range anywhere from $50 to $5,000. Unpaid balances accrue interest at the rate of 2% per month. So this is compounding, kind of like your credit card interest. So in some cases, the IDES director can waive payment of penalty and interest. And this is going to be done on a case by case basis. And it's usually done, because of hardship or some other extenuating circumstance. You have to apply for a waiver within 30 days of the date that you get your notice that you're delinquent. And then you have to show a good cause for your late filing and then pay in full for your past contributions. All right, so there are audits, and in order to ensure compliance with the Act, payroll audits are performed by IDES. Employers are required to keep payroll records for 5 years. So this also speaks or reminds me that part of your compliance, even though you're not necessarily filing this annually, you need to have a document retention policy, and that should indicate what records you keep, what records are permanent, how long you should keep certain records, and obviously payroll records are going to be on there, and your policies should indicate that you keep those records for at least 5 years in the event that you're audited, right? And this is critical here. If you are a member of the board, even if you have no knowledge, if your organization did not pay any payroll taxes at the federal level, at the local level, any payroll taxes, any unemployment insurance, then you could be personally liable if your organization doesn't have enough money to pay what's owed, right? So that's really, really critical. So the Unemployment Insurance Act was recently amended to provide for the personal liability of any officer or employee of an employer who has control, supervision, or responsibility for the filing of reports or the payment of contributions, payment in lieu of contributions, penalties of interest for the employer, and who willfully, that's the operative word, if you willfully fail to file the reports or to make the payments. All right, so you really need to be very well aware of these laws. Make sure too that there's some reference, or these laws actually inform your policies and procedures at the board level as well as at the employee level. So the consequences are pretty steep for failure to pay. So remember, there are consequences for failure to file, but there are also consequences for failure to pay. If an employer fails to file a report or fails to pay any contributions, payments in lieu of contributions, penalties, or interest on time, the department will be looking to corporate officers and other responsible individuals. These are employees, looking for them for payment. If such payments are not made, liens on homes, autos, boats, and other property, and levies on personal bank accounts may follow. For more information, go to ides.gov, taxes and reporting. All right, so for workers' comp, you have to be mindful of what their eligibility is, right? Workers must have earned at least $1,600 last year to qualify. At least $440 of those $1,600 must have been earned during the quarters other than the one for which the earnings were highest. And workers who have been awarded the temporary total disability benefits may have their base period determined differently. So again, contact your local IDES office for more information. And again, this is for the state of Illinois. All right, so workers might be or may be ineligible for benefits if they quit a job without good cause, if they're discharged for misconduct, or if they're involved in a labor dispute. Benefits may be discontinued due to physical inability to work, failure to adequately search for work, mental inability to work, or unavailability to work. So you have to be really, really well versed in labor law. Make sure that that your human resources department understands all of these rules and more, right? Make sure you have an attorney who is well versed in labor law so that they can also help navigate, because you can see that this could be very complicated, right? So eligible claimants can receive up to 25 weeks of regular benefits during the year after they first file a claim. So we're looking at roughly 6 months. So during periods of high unemployment and extenuating circumstances like COVID, additional weeks can be authorized, and the amount of benefits paid depends on the amount of wages earned during the base period. Again, this gets very complicated, and I would suggest that you uh, take the time to educate yourself and your HR person on these issues. Make sure you have an attorney who is well versed in labor issues. All right. Are there any questions? Are there any comments? Even if you don't do anything but introduce yourself, tell us your name and where you're from, that would be awesome. I thank you guys for hanging in there. This is not the most exciting topic, but my dad used to tell me some of the most important things in life, some of the most important meetings in life are boring. They determine, our trajectory in life. All right, so it doesn't look like there are any questions, no comments. No one is willing to put their name out there. I just want to say thank you so much. I really, really appreciate your time and your energy. Um, Again, we're going to continue this conversation inside the nonprofit Utopia community. We're going to be meeting Wednesday at 9 o'clock to go over the forums. All right. And we're not going to have time to go through every forum, but we're going to focus on the forums that our members need help. All right. Thank you very much. And you take care. Bye bye.